Welcome to Power Charting. My name is Bruce Fraser, and I am your co-host for this episode of Power Charting, and I am with the inestimable Professor Roman Bogomazov.
Well, thank you, Bruce. Great to be here.
You know what inestimable means?
I am lost in translation.
You are a treasure of inestimable value. You are too great to calculate.
Oh my gosh. All right.
Yeah, so there you go.
All right, let's go.
So I'm so glad you're here.
Thank you.
Let's have some fun. We have a show planned for you. We have too much to do in too little time, which is the way that it should be. So let's get started. So we have a couple of announcements. And so there's 3 upcoming events that are important to Wyckofians, and we will not linger on these. But this coming Saturday is Best of Wyckoff 2018. And this is an online conference, and there is an amazing group of speakers for this conference. I am going to be the host, and the other big event is that next week Wyckoff Market Discussion is going to be free. So this is next Wednesday, and it's from 3 to 4:30 Pacific time. So we hope that you can make that. And also Roman has started his Wyckoff trading course. And so this is always a very important event or activity for Wyckofians, because this is an ongoing course. It's a series, and the inestimable Professor Bogomazov teaches it. So anyway, go to wyckoffanalytics.com to learn more. So we'll just leave it at that. So Ramonda, is there anything else you wanted to say about any of those
No,
events?
just come to our website, check it out, sign up. We would be happy to have you for the Best of Wyckoff and the WMD class.
Wonderful. Today, what we're going to do is, again, our focus is on scooters, and we're using predefined scans to do this work. And we're looking at the new 52-week high predefined scan, and there is a grand total of 519 stocks or instruments that are in this list, and this list is as of August 29th. So when you go in and look at this list, you will discover that the number is going to be different. The stocks are going to be potentially different. And so you'll want to keep that in mind when you look at the results that you get. So here, what we've done today is we have focused on New York Stock Exchange issues. So what we can do is we can click on that number 243, which will populate a list of the individual stocks that are making 52-week highs in this predefined scan. And then what you'd have to do is either look at all of them or look at them by exchanges. And so you choose the exchanges that you want to look at. The other thing that we did is we organized the scooters by and looked at stocks, and we selected these stocks, so you certainly can go look at others that are between 70 and 80 on the scooter list. So interesting, they've made a 52-week high, but they're between 70 and 80 on the scooter list, and they're New York listed issues. And the other thing that we want you to notice here is that under the universe, you can sort these by large cap to small cap, large, medium, small, and then ETFs. And so you can eliminate the ETFs by clicking on the U and then changing the sorting criteria and then looking at the stocks that you want to look at. What we've done, because we wanted to focus on 70 to 80 in the scooters, is that we have gone through and selected the individual stocks. These are all individual stocks and not ETFs. So anyway, Roman, any thoughts or comments on this?
Yes, I think the important idea here, guys, is just to think about why we're choosing the scooter as a tool for us to filter another scan That's number one. And the second question is why we're going to the 70s and 80s. So the first answer is very simple. The way how I look at scooters, and I'm sure that Bruce has the same opinion, is I want to define the context of where we're going to find the signal. So 52-week high is a signal by itself. Last week we looked at the strong volume increase. That's a signal by itself. Um, but when we look at the scooters and we decide where we're going to go, we are basically defining the trending or non-trending environment, or what kind of trend we want to look at, for that signal. For instance, if we're looking at the scooters above 80 and up to, let's say, 99, then we're going to have the stocks that are predominantly going to be in the uptrend. They're going to be in some kind of upswing. If we're looking at the stocks that are below 80, but maybe above 65 or 60, we're probably going to look at the stocks that have been in some kind of consolidation and are trying to get out of that consolidation by, let's say, going up. And then if we're going to look at the scooters below 50, below 40, below 30, those are going to be the stocks that are exhibiting those type of signals, but that are probably in some kind of different structure. So scooters is just a great tool to understand the context and to apply that context to the signals. And specifically, between 70 and 80, as I said, in this type of market that we are right now, in the market that is making the new highs, that is advancing, we are most likely going to be looking at some stocks that are still making the 52-week highs, but they're very close to their structures. And this is where we want to catch that signal. This is where we want to catch the possible point of entry. Bruce?
Well, you're encouraged to go look at these the stocks in this list that are in the different scooter ranking areas. So definitely go do that. And you'll notice in the ones that have been selected for today that they have a family resemblance. And this family resemblance is what Ramon was speaking about. And so let's have a look. So Shutterstock is has been in an uptrend really since August, and has had a really steady uptrend with a couple of, call them interior uptrends, that have taken place. And after a pretty sharp correction in April, it immediately got back into the stride of that uptrend, which stocks tend to do, and started to work its way back up to new highs. So Ramon, what are you seeing here?
Well, this is an interesting chart because a regional accumulation is not that big. I mean, we're just 3 months into this formation. So we wouldn't be expecting a lot of the movement out of this type of the formation. And as Bruce has mentioned, there is kind of like this one day or event-driven markups that we could see. And everything else is just a retest of that markups that we're seeing. Also, what's interesting is how the price, once it hits the resistance, the overbought conditions, kind of stays and lingers around the resistance. This is usually shows us some kind of strength. There is no willingness to sell the stock, to part with the position by institutions. So they're expecting that there's going to be some kind of continuation. And then a change of character comes around the late of April. What's interesting about the formation after the late of April, after the change of character, is that it has this upsloping structure to it, tilt to it, and then a potential phase C, the last testing phase of the supply of all of the support points in this formation is taking place. And out of that, we have very constructive 3 bullish bars on the way up. So we're instantly thinking this is a sign of strength rally. And then look at the next reaction, how small and how horizontal it is with the diminishing supply signature. So that tells us that supply at this level, where previously we had a stop in action, actually is being observed, and it's not occurring in a very aggressive manner. So that suggests a continuation, and I think that we have some room still to go and touch the long-term resistance. Bruce?
And Scooter is in a position where it could go from the high 70s up to the high 90s in a good uptrend. And so there's room in the Scooter for higher prices. And the other thing I noticed very briefly, and we'll move on, is that the April decline, very sharp decline, a lot of movement, a good volume, but then it goes to the basic stride of the uptrend. And then the July decline, which occurs in the second half of July, has a sharp break. It's the biggest break since the April decline, but is much smaller than the April decline, and also respects the upward stride. And so that in and of itself, those two declines, I think, are a sign of bullishness for the stock and reaccumulation. So this is like a reaccumulation on a rising scale. So anyway, so moving on, Abbott Labs and the drug area is starting to show signs of life, but notice this wonderful reaccumulation structure that we have that's much more horizontal, but you can see that there's also an upward tilt to Abbott that begins back in April, and as it works its way up to the resistance area, and the resistance area is formed by the buying climax. So look at that classic buying climax. And so this creates the buying climax, and the automatic reaction set up the range bound condition, which we would always defer to the idea, because notice the good uptrend that was concluded at the buying climax. So we would assume that we're going to have reaccumulation and a continuation until proven otherwise by a well-formed distribution structure, which we do not have here. This is really nice looking accumulation. Ramon, what do you see?
Yeah, we have such a great area around April and May, early May, which is very reminiscent of the structure of the market that we have had. It happens on the diminishing volume signature, which is extremely important for the absorption. And we see multiple attempts to retest the lows. And all of these attempts within this smaller structure, they fail. And they have demand tails behind those bars that are trying to touch the support. So this is inherently bullish, and that suggests that the absorption is taking place. Please also note that the original change of character, the volume signature on that was quite high. And then going into the next reaction that is close to the character in terms of the distance traveled, and close to the character, maybe slightly close to the spread, is obviously diminishing. But the volume signature is so much less. So, and that tells us that whatever selling has come on the change of character, there is no more of such force that pushes the price in this way. And therefore, we already seen, even on this reaction, that absorption is taking place. And then in the smaller range, there is just a period where absorption is being confirmed and is being tested. Bruce?
Well, just to put a little mustard on this hot dog, notice the decline from March to the early April. And so you can see that there's a lot of supply in that decline. Well, big red bars, lots of volatility. You can see about the midpoint of the trading range that there's a little bit of a selling climax, and then it stops, and then it continues back down to support. So I just keep that in mind, because then you have a sort of an accumulation area in there for a month, in the month of April. But what I want to do is now fast forward over to June. Look at the decline in June. So in June, you have something similar to what occurred in March. You have a decline, and then you have a bit of a climax that comes at the end. Well, what's the big difference here is that after a short period of testing, you have a really nice pivot back up again, which is what you didn't get in March. And so we would look at this, and Ramon, I would consider this to be a last point of support in that area. And this is something we want to develop our eye for, because this is a distinct change of character from what happened in March. And that is that you went down for almost the same amount of time, but you went down half as much, and roughly. and then had a little bit of a climax, a series of tests, and then turned back up again, which is a distinct change of character from what occurred back in March. So anyway, I'll leave it at that because we have a lot more to do. But
One last thought, Bruce, here. Just, one of the ways to see visually that there is a change of character on the reactions is just to notice, the distance, obviously. And Bruce has mentioned that the reaction here in June, just went to 1/2 of the range, but also the horizontal nature of the reaction that occurs before the next move that could take us out of the formation. And we see both of those characteristics. First, the contraction of the distance traveled, and then the characteristic of the formation being flat.
and that's why you're inestimable. So, and then also notice on the scooters how much room there is for them to run higher. So good one. Thank you. IDEX. Okay, so IDEX has sort of a similar family resemblance. All these have, notice they all have similar family resemblances because what we've done here is we've identified stocks making 52-week highs that are between 70 and 80 in the scooter ranking. And so this gives us a way to be able to find the structures that we're interested in. And you need to go look at the ones 10 to 20, 20 to 30. There probably aren't many of those in the 52-week high, but you'll find a few. And I think I know what those look like chart-wise. But anyway, here we go, IDEX. So buying climax after a beautiful uptrend, becomes overheated, climaxes, automatic reaction, which shows that there's a lot of supply by large institutional interests and they sell stock. This creates a trading range. And so now we have a range-bound market, which makes us very interested in the stock. So we're looking at this stock in February and we're going, oh, this is an interesting stock. Let's keep this on our watch list. And then this beautiful automatic rally that goes up to, after the automatic rally, up to the secondary test, which retests the buying climax and is an up thrust of sorts. And then after that, a continuation of a lot of supply where it goes from resistance back to support. It's exactly what we expect to see in phase B. Phase B is a lot of volatility. It comes unexpectedly. It's surprising. And notice the difference here is that after that decline back down to support, you get a rally that takes a month and a half, but it does not get up to resistance, which actually makes people bearish. And people start to think distribution. And so how do we protect ourselves from the view that this is distribution is what occurs next, which is the phase C last point of support, which you get a decline. The decline is a pretty steady decline down to an area above the support level, and then test higher lows throughout that period, which shows that there's good bids under this market, which is distinctly different from what was occurring prior to that. Ramon?
Yeah, so the same thought as on the last chart, and yes, this is very similar to the last chart. Look at the aggressiveness of the change of character, then look at the next reaction where it goes down first. It has this ABC or 1, 2, 3 structure, comes to the middle of the range, tries to rally out of that position. So that already by itself shows a difference from the previous rally. It shows a little bit more strength, but yet is incapable of doing so. Retest the support. This retest happens on consistent supply signature, but it's slightly less than the one that we had, the volume off the top right here. And then the next rally, again, diminution in distance, which is showing the difference between all of the reactions. And then the latest reaction is flat. And that's the picture that we had on the previous chart. So that's the change of character that we're seeing throughout the whole structure. And also, it's very important for us Wyckofians to study, areas like this. This is where we are going to see an absorption of supply by the contracting volume signature, and higher highs, higher lows. So maybe in the future sessions we could, study this a little bit more.
Look at that marvelous jump after that period that you just highlighted. Magnificent jump. That's a total change of character from what occurred prior. And then it goes above the resistance area, which is in and of itself a major sign of strength, and then has no capacity to be able to return back into the trading range area. And so this is a major change of character right there, and should really have our spidey sense up that this is ready to resume its uptrend. So a really nice chart. And also please, notice the scooter where it is. Okay, well, listen, we're doing pretty good. Let's keep going. We have about 8 more minutes. So I'm a slave to the clock. So Fortive, Roman, why don't you start on this one?
Okay, so kind of also has a resemblance of what we've looked at, but there is a little bit of a difference around this area right here, the latest area. And actually, I do like it slightly better. And the reason why is because look at the rally that tries to create an upthrust in June. So that shows already an element of strength. There is some kind of interest by institutions behind this rally, and it pushes the price above the resistance. Also, there is an upthrust almost immediately after the stop in action and after the change of character here in phase A in February and March also shows elements of strength. And again, just a very, very flat formation as a reaction, right into the resistance, which becomes support, and very lively and aggressive move out of the structure. So a very, very interesting for us chart. Bruce?
Highlight that volume that comes on that continuation up and out. That's really showing a real aggressive demand for the stock. And the only other thing that I would like to add is that oftentimes when you get to the last point of support area that concludes the accumulation or reaccumulation, is notice the persistency of the decline. It doesn't go down from high to low, but it goes down persistently, and that actually makes people quite bearish. Oftentimes you'll see, and again, this is just an observation, is that I've seen this many times, is that the people will survive the whole reaccumulation owning the stock, and they'll give up the stock on the last point of support because they just get tired of waiting. And so look at all that volume. So there's definitely a big component of demand in that volume as it's pushing down. And so we're always looking for the elements of strength in weakness, and the elements of weakness in strength, and that's part of the Wyckoff way. So anyway, okay.
I think you're so right about people giving up their positions right in this situation, right at this spot, and it's predominantly based on the increase of supply idea, and they just get scared. Well, if there is a supply increase, you always want to wait for the test. So where is the test? The test is the next high or low. Right here, we see that there is no ability of the price to go down. It respects the trend line right here. So you kind of have to wait and see. Action test, action test.
Wonderful. Okay. Well, so far so good. Cooper companies. This is interesting because it's a slightly different structure. And I really I tend to like these where you get a you get a push up to the resistance area and then a decline. But what happens is it tends to move down in stages. And instead of having a big automatic reaction, which I think is a sign that the institutions are not so ready to give up their stock. And so this is, I think, the case here. You're getting some volatility in the declines, but the volatility that's coming tends to be a little more muted. And so then the reaccumulation occurs as we get into December, January. Roman?
Yeah, I really like, talking about how the sentiment changes through the whole trading range, how the institutions are behaving. And there are such distinct phases to this whole formation. So I'm just going to concentrate on this. starting from June in 2017, we're seeing some supply coming into this formation. And we're seeing that this whole formation here, the whole purpose of it is what I'm calling a stop in supply. It's trying to stop an outperformer from going further up. And there is some kind of sell-in by institutions on the way up on all of these attempts to go up. Then a very distinct next phase, which has selling attributed to inability of the price to go even further up. So that's a change in the institutional behavior and institutional sentiment. And at this point of time, they're saying, well, I don't see an absolute and relative outperformance, so I'm going to scale out. And we kind of see this from the signature that they have here. So institutions are selling. And then the whole formation by itself also is very interesting because you have a lot of volatility in their initial phases A and B, and yet when we go into phase C, look at how volatility is diminishing, and it shows a lot of the absorption that was produced by this very aggressive event. I have a very interesting nickname for this. I'm not going to say this, but for those of you who know me and have been 2-hour sessions with Bruce at WMD, you know, you'll recognize this pattern. Bruce, I think that the key for us is just to basically recognize this action right here, where we have an absorption at the support level, and then we have a very distinct change of character, a sign of strength rally, and a backing up action.
Notice how this is a spring, and the spring comes in early April, and it's a very marginal break below the late December, January low, and the volume doesn't appreciably expand. And so we could make the case that this is a number 2 or number 3 spring, which is we can't get into today, but a number 3 spring, which is a very marginal break of a prior low and then a reversal, is you can buy that right away. But here you get a series of tests that come afterwards. So there's lots of opportunities to buy this once you see that spring happen. And we're going to have a great discussion on springs at the Best of Wyckoff conference on Saturday. So that'll be really worth seeing. So anyway, okay, so we're in good shape here. We have about a minute and a half. So HPQ, Ramon, take it away.
Okay, well, a huge change of character that catches our eye right away, but look at the volume signature. It's not that big. The only thing that is happening here on this change of character is that the result to the downside is extending itself. So it just shows us that at this point of time, there is not necessarily a lot of institutional selling, but it produces a better result to the downside. But with which of the reactions we see either diminishing spread or diminishing distance that is traveled, and then on the subsequent reactions, look at how shallow they are, and look at how volume signature is just going down, down, down. So a very interesting bullish pattern, and just suggest a continuation. Bruce?
Really nice volume on that bullish bar, the most recent bar on the chart. Yeah, it's very like it's done being absorbed and they're ready to mark it up. So terrific looking chart. Okay, Ramon, we have about 10 seconds left, and thank you very much for watching. We hope that you can attend our BOW conference, and just have a great week, and we'll see you next week. Thank you, and so long.
Thank you. Bye-bye.